Welcome to Value Investing in Growing Companies. If you have chosen this course, I assume you want to learn how to trade the best possible strategy in the stock market. Rachel and I will accompany you through the lectures. If you are wondering who am I, well, I am John, and I am going to kick off with the first lecture of this course developed by our director, Omar Yassin, founder of InvestAgenny.com. Omar has been trading and investing in stock market for quite a while now, and has developed a strategy he thinks is the best for a novice investor. I hope you will love his approach. So let's begin. The first lecture jots down the content of the course. Some instructions that need to be kept in mind are: 1. The course contains a lot of ratios and numerical calculations, so make sure to take notes as you go along. 2. The course uses two different companies as examples for the strategy used throughout. We do not by any means give, or imply a buy or sell call on these companies. The examples are just used for educational purpose only. 3. We believe time is money, so we have tried our best to make this course as short and precise as possible. Investing in stocks requires vast knowledge, and there is constant learning throughout an investor's life. Therefore, we have tried to use the best ratios and criteria for our stock hunting. If you have any query regarding this course, we will be happy to answer. Remember, the more the questions you ask, the more you learn. 4. This course is designed best for audience having some background in finance. But do not worry, we have included some lectures which would be beneficial for beginners as well. However, this course does not cover minor information, for example, selecting a broker, how to check the commission rates, etc. Focus will mainly be on strategy. Now let's look at the content of the course. In the next lecture, right after this one, we will be looking at why is it necessary to invest for an investor? What drives the economy? Why is inflation necessary, and how to beat the inflation? In the next section of our course, we would look at different financial instruments available in the market for investors, talk about what are stocks, and how do stock markets work. In the next lecture we will look deep into the teachings of Benjamin Graham. Benjamin Graham is called the father of value investing. His strategies have been the key ingredients of success for many value investors. We will look at his approach and would take some key notes on his investment principles. Moving on, in the key concept section, we will firstly assess the power of compounding. It is very important for an investor to understand what compounding interest is, and how a value investor can earn millions using this approach. Later we'll take a deep insight into the comparison of day trading and value investing, fundamental and technical analysis. An investor should be able to learn the difference between these approaches and make a list of pros and cons as well. We will also overlook if there is a necessity of hiring an advisor or follow buy and sell calls from a broker. In the shortlisting stocks section, we will start our journey of stock hunting and learn how to use stock screeners to shortlist our stocks for further in-depth study. In the lecture of methodologies for picking stocks, we would look at different approaches available for stock investing. An approach will also be selected for the course. We believe if an investor uses a better approach, he could outperform the market in the long run quite easily. Reading annual reports is the crux of our course. If an investor is able to learn and read annual reports, he can become a successful investor. This is precisely what we are going to do in our 2 lectures of how to read annual reports. Moreover, we will learn different instruments in the financial statements. If you have a finance background, you may skip this lecture, but I will highly recommend that everyone should go through this one to better understand the key ingredients of financial statements. Next up, we will go deep in our stock hunting and will use the 2 companies we have chosen for our course. The lecture on how to do financial analysis uses 9 different ratios from the 3 financial statements to look at stocks from value investing point of view. Financial analysis would help an investor grasp different concepts of looking at financial statements of any company. Our course will then lead us towards price to earnings ratio, The one best valuation indicator to check the valuation of a company, industry or even the whole stock market. The price-to-earnings ratio tells us if the stock or market is trading at cheaper rates or not. We will conduct a study on the current market valuation and look at some indicators to calculate if the stock market is overvalued or undervalued. After this, we will then move on to valuation analysis of a company. Using some ratios, we will be able to check if our companies are available at cheap attractive prices or not, and we'll also look at reasons why is valuation analysis important for an investor. Further down the line, we would look at business analysis of a company. It is very important for a value investor to check the business dynamics of a company, its production efficiencies, inventory efficiencies and so on. We will also look at the favorite analysis of most successful investors, the management analysis. The management analysis is helpful for many important studies that indicates management efficiencies, management's roles in the company and their decisions' impact on the stock price. We would highly recommend an investor should learn these management analysis tactics, and follow through in his own stock hunt. Further, we will learn some more ratios based on studies conducted by business and finance professors of different universities. These ratios can further help us look into the financial condition of the stocks. Do you know, one of the most favorite indicators of Warren Buffett is to look at the excess cash a company have after giving away dividends and retaining the rest amount back in the company. This is indicated by the free cash flows from the financial statements. We will learn the power of free cash flows, its role in checking the financial condition of the company and its usage in different sectors of the company in our lecture The Power of Free Cash Flows. Next up we will look at some of the ways of how to monitor stocks in our portfolio. Since many investors lose control of tracking the companies and shares they have invested in, we will look into some of the best ways to avoid these mistakes and maintain our portfolio. Finally, the last topic in our Digging Deep section belongs to when to sell a stock. Although there is no single criteria to decide how and when to sell a stock, we will look at some factors that might help an investor to decide it for himself. The last section is devoted to finding the intrinsic values of a company. Since many investors believe a stock is undervalued if it is trading at a discount to its intrinsic value, we would look at 6 different calculators to find these values of our company. Lastly, we will look at some of the ratios we have used so far to check the stability, valuation and growth factors of a company. I really hope you would like this course. Remember, we have used 2 different companies as examples, and will perform our strategies on them for educational purpose. So what are you waiting for? Let's begin.